In this video, I will run through the example of a pricing case. Anushka Pal, as usual, was very excited and willing to help administer this case. This pricing case is one of my favorite in that it is very open-ended, has a lot more going on than an average pricing case, and can be solved in very many different ways. I originally received this case from my friend Udit and have since then enjoyed giving it to quite a few different people.
So the problem statement is that your client is a mad scientist who has invented a time machine and wants to make as much money as she can from it.
All right. Just to make sure that I've got the statement correctly, I believe that our client is a mad scientist who has recently invented a time machine. And our objective here is to figure out how she can make the most amount of money possible from this. Is that correct?
Right.
All right. I'd like to just take a couple of seconds to put down my thoughts and ask a few clarifying questions, if that's okay.
Sure, go ahead.
Now that we are clear on what the problem statement is, we move forward to asking a few clarifying questions. I have a couple of clarifying questions to better understand the situation at hand. Firstly, in terms of the objective, I believe that what we need to do here is identify what sort of business model can be used by the mad scientist so that she can maximize her profits. Is that our objective here, to just pick out one business model to maximize profits?
That is one of the objectives. Anything else that you could think of?
Right. So I think what we might have to do is first of all identify a business model. Are we going to sell it, rent it, or so on? And secondly, within the model, we might have to identify what price point, whom to target, or something of that sort.
Right. Absolutely.
We identify that the objective here is to first and foremost identify the best way of monetizing the time machine. And secondly, to identify within this method what the price should be set as. One other thing that I'd like to understand here is that can the mad scientist actually create more number of time machines? Can they copyright this, or is this something that likely will be purchased by a government and kept safely?
So currently there's only one time machine that exists, and we don't, others cannot be built, and we needn't worry about the copywriting issues and stuff. There's one and only one will exist.
Understood. The next question that I have is to do with the overall working model of the time machine. So I'd like to understand how this time machine really works. Is it going to be able to travel from any point of time and space to any point of time and space? Can it take any number of people? And do we need to really worry about certain laws of physics while actually figuring this out here?
Right. So it can be used to travel to any time, to or from any time, and to any location on the earth.
We then clarify what exactly we mean by time machine and what is and isn't within its scope.
And what was your other question?
Right. How many people is it going to take at once? For how long can one disappear? And what really changes with the laws of physics? Is that something we have to factor in here?
Right. So it can seat 4 people at once. Okay. And each trip is for 3 hours, including the prep time. And no, we won't have to worry about the laws of physics over here. So we can just take it for granted that it works.
All right, understood. So just to make sure that I've understood correctly, I believe that the time machine that the mad scientist has made here is one which can take about 4 people to any time and location on Earth at a point of time. Each trip lasts about 3 hours, and at the end of that, everyone will be brought back. We can assume safely that this isn't going to alter the timelines in any way, and you can't make any big changes to the course of history in order to profit. And our key objective here is to figure out how we can now use this time machine in order to maximize the mad scientist's profit. We more clearly understand how this time machine works and what it cannot do.
Okay.
I think I have enough information. I'd like to take a minute to draw up my structure at this point.
Sure.
With a clear idea of the objective at hand and a few more details thrashed out, we move forward into structuring this pricing problem. So I believe that for us to come up with the right business model and to then also select the right price point for this time machine, there are broadly 2 approaches we can take. The first is that we can treat it as a service where, for example, different people are allowed to take trips on this time machine and go to any destination of their choice. Or secondly, it can be treated as a product and can be sold to the highest bidder. Does that seem comprehensive, or am I missing something out here?
No, that is fairly comprehensive. You can go ahead.
Right. So I would like to first try and come up with a valuation for the time machine as a service, identify over the mad scientist's lifetime how much money she can make by treating it as a service. And I believe that the price point for this as a product would probably match the cumulative lifetime value as a service. Does that seem like a fair approach?
Fair enough.
All right. We map out that the time machine can be monetized either as a service or as a product, and then fix on valuing it as a service first and then arriving at the product's valuation. Now, if we're treating it as a service, I think there are three different ways in which we can arrive at a valuation. The first is cost-based pricing, where we look at the costs involved in creating and then operating the time machine. The second would be value-based pricing, where we look at the value derived by the end users. And the third and final one would be competitor-based pricing, where we look at any similar offering and try and identify what might be a relevant price point basis what else is in the market. Does this seem comprehensive, or might I be missing out on an approach here?
No, fair. You can continue.
In this context, my hypothesis would be that value-based pricing would be the best approach possible because the costs involved are probably insignificant. And given that we want to maximize our profits, we can probably charge a lot higher than the costs as compared to what we would actually want to earn. And competitor-based pricing probably wouldn't be very relevant because my understanding is that there isn't really a very comparable product. Does this approach make sense?
Yeah, you're absolutely correct. So let's go ahead with the value-based pricing.
All right. I'd like to just take a minute once again to structure my thoughts.
Sure.
We list cost, competitor, and value-based pricing as the three possible approaches, and then fix on value-based pricing as the appropriate approach for this context. To understand how each of the customers might actually value and how much they might be willing to pay for a single trip, I think we need to look at two elements. The first is who will actually be using this time machine, who are the customers. And secondly, how will they really compare and benchmark the pricing, or how will they value a trip on the time machine? Does that seem like a good approach to take?
Yeah, sounds fair.
In order to identify how customers would value the time machine, we have to first identify who the customer is, and secondly, what their proxy for comparison would be. Right. So to look at who will be using the service, I believe that the main constraint here will be on the supply side, because when we have something as rare as a time machine, anyone who can use it will want to use it at least once a year. Does that seem like a fair assumption?
Fair enough.
Right. And on the supply side, I believe that it can be used for about 365 days in a year. And in a day, it can be used 8 times, assuming that we'll be using it for all 24 hours in 3-hour slots. And that should give us around 3,000 trips. So does it seem like a fair assumption that only the top 3,000 customers, by however we might define that, will be able to use it each year?
Yeah, that seems like a fair assumption. Okay.
All right. So I'd like to refine that further by saying that given that we want to maximize our profits, we would probably want to target the top 3,000 richest people in the world. And each of them will probably bring in a group of another 3 people with them. And those would likely be our customers. Does that seem like a fair way of going forward from here?
Yeah, fair.
To identify who the customer would be, we assume that there is likely to be a supply side constraint, given that there is only one time machine, and identify that the top 3,000 richest people will finally be the customer. All right, great. So I'd now like to move forward to how each of these top 3,000 of the richest people will actually value the usage of this time machine. I'd like to take a couple of seconds once again to structure my thoughts.
Sure.
I think that the closest benchmark for the richest people in the world might be the total amount of money that they spend on all of their vacations through a year, given that this is a very exotic and unique sort of value proposition. Does it make sense to therefore compare this to their overall expenditure in a year on vacations? We identify that a customer's willingness to pay for a trip on the time machine will be a function of both their yearly earnings as well as a percentage of money that they generally spend on vacations.
Fair enough.
All right. So in order to benchmark how much they might be spending on vacations in a given year, I'd like to first look at the net worth of the top 3,000 richest people. I like to take as a percentage of that what they probably earn in a given year. And from that, I would like to take a percentage of their annual earnings as what they would be willing to spend on vacations in a given year. Does that seem like a good way of benchmarking this, or might I be missing out on something here?
Yeah, it's quite comprehensive.
All right. So I'd like to now estimate what some of these numbers might be. I believe that the top 3,000 people in the world, wealth-wise, might all be roundabout billionaires, or at least close enough to that general benchmark.
Okay.
Further, I think that the richest people would only earn a certain fraction of their net worth as their annual earnings, given that most of what they are valued at is a function of assets that they own. So I'd say maybe around 10% of their net worth is what they would earn in a given year. And finally, I'd say that
Okay.
perhaps of their annual earnings, again, another 10% might be what they would be willing to spend on vacations in a given year. Do those estimates seem fair, or should I revisit some of these numbers?
No, no, sounds fair. You can proceed.
All right. On the whole, that gives me around 10 million as the value that any one of our customers might be willing to peg one trip or a 3-hour trip with our time machine as. We further break down earnings per year as a function of net worth and percentage of net worth earned per year. And then we arrive at 10 million USD as the willingness of a customer to pay for a single trip. Right. So I believe that we've now arrived at how much money we can make by using this as a service, which is essentially 3,000 trips a year into $10 million dollars earned per trip, which comes up to around $30 billion dollars in a given year. I would now like to look at the product angle, which is that if we were to sell this time machine to a third party, how much money could we make through that? Does that make sense, or am I missing out on something?
No, no, that makes sense. You can go ahead.
All right. We then calculate that the mad scientist could gross $30 billion dollars per year through the time machine using it as a service. So I believe that as a product, we can come up with the valuation of the time machine as the amount of money that we make per year into the number of years for which we can effectively use the time machine, which would essentially be the minimum of either the lifetime of the time machine itself or of the mad scientist. Does that seem fair?
And
All right. And if I've understood correctly, this time machine isn't going to wear out anytime soon. We can use it for all practical purposes forever. And therefore, the bottleneck here is how long the mad scientist will live. Is that correct?
yeah, correct.
All right. And while I haven't collected this information, I am assuming here that the mad scientist is maybe in her 30s or 40s. And the average human, even if they own a time machine, might live to maybe the age of around 80 years or so. Is that fair, or should I revisit some of these assumptions?
You can go ahead with the assumption.
All right. Therefore, we're saying that the mad scientist will live for maybe another 50 years. And for each of these 50 years, she is earning $30 billion dollars per year. So anyone who's going to purchase this time machine from her would have to pay her about 1.5 trillion US dollars. So that
Right.
is basically what I believe the price of the time machine should be. Is that fair, or should I revisit some of this?
Yeah, it sounds fair.
If sold as a product, we assume that the time machine will be valued by any purchaser in a similar way to how the mad scientist would really monetize the same. As such, we arrive at $1.5 trillion dollars as a perceived value of this product in sale. All right. Before closing, I would like to also check on whether this is actually a feasible solution. To do that, I would like to check on whether it is actually possible for the mad scientist to finally sell the time machine. Through the structure, we've arrived at the facts at hand. We now want to arrive at what the final solution or recommendation will be. Now that we've arrived at a price point for selling the product, I would like to just quickly check on which of these two models actually makes more sense. My initial hypothesis is that selling it as a product makes more sense for the mad scientist because she makes pretty much the same amount of money. It is a one-time deal, and therefore she saves up on effort. And once we factor in the time value of money, it is effectively worth a little bit more. In order to check on this, I would like to first look at two factors. The first is whether she can sell it for $1.5 trillion. That is, whether it is feasible. And secondly, whether she should sell it at all. Does that make sense?
Yeah, makes sense.
All right. In order to check on whether she can sell it for $1.5 trillion, I'd like to check if there is any buyer who might be able to afford this price. My first instinct is to think that perhaps the US government might be one of the leading purchasers for an item of this sort. And to the best of my understanding, their military budget would be about half this number. And given that this is a very unique artifact that would kind of give them unlimited power, I think that this is perhaps a price that they would be willing to pay. Is that a fair assumption, or do we not think that even the US government would be willing to pay this sort of price point?
We can go ahead with this assumption.
All right. Secondly, I'd like to examine whether she should sell the time machine. Here, I would like to look at some softer aspects, such as is it in her best interest to get rid of such a valuable asset, given that we've already identified that she will not be able to manufacture a second one? My instinct here is to think that given that it is this powerful, she probably will not be able to defend it, and US government or other such powerful organizations in the world would want to procure this sort of an artifact, and therefore is probably in her best interest to sell it. Is that also a fair assumption, or am I missing something out here?
Yeah. Sounds fair to me.
All right. I believe that at this point I have enough information to make a recommendation. I would like to take a minute to structure my synthesis if there isn't anything else that I've missed out on checking on. Selling the time machine as a product seems to be the favorable option. In order to verify the same, we first check on whether she can in fact successfully sell the product. And secondly, whether she in fact should sell the product, whether it is truly in her best interest or not.
So I think we've reached the end of the case. Why don't you synthesize the case for us?
All right. I'd like to just take a couple of seconds to capture the insights once again.
Sure.
Now that we've arrived at a clear solution, it is time to take a pause and synthesize what we found out through the case. I believe that our client, the mad scientist, should in fact sell her time machine to the US government for 1.5 trillion US dollars. The reason I think that she should do this is that firstly, this is a maximum price that she can possibly earn for the time machine that she has built. Secondly, the US government is the only buyer who will comfortably be able to match this maximum price that she should be selling it at. And thirdly, this is the only model which really minimizes her effort and any other inputs from her side, while also maximizing the total earnings that she can gain. In the synthesis, we start off with our recommendation first, and then arrive at the 3 reasons why we believe that our recommendation is just. If this video or other videos in the series seem relevant and useful to you, do remember to like, share, and subscribe.